Guys, welcome to the channel again. Um, Happy Sunday to everybody. I know the next week is there's a lot of things going on. I just wanna few things is I want to talk about what we need to watch out for next week, and then also I'm gonna go over three potential buys coming up right now that are really good, undervalued, and I'll go through the analysis for each one of those stocks and why I think they have a very high potential for growth. So starting off here, coming up this week, we got the Trump tariffs starting on April 2nd. We have job reports coming up on Friday, and yeah, a lot of things going on, and also with so much economic uncertainty and recession worries that are happening. So the job report on Friday is really important. So the and also the tariffs, and see how the market would react to that. And so we have on Monday we have some companies reporting Tommy Hilfiger, and then Tuesday we got the PMI to watch for. This is the manufacturing PMI, and this is the reciprocal tariffs on Wednesday. And BlackBerry is reporting, RH is reporting, I think that's a Restoration Homes. So an important week. And then the most importantly, it's the Labor Department releases job reports for March. Economists forecast 138,000 increase in non-farm payroll after 151,000 gain in February, and the unemployment rate is expected to remain at 4.1. So I would like to see um, the new job report to be increased more than 138,000. That's kind of low, but also you gotta know the unemployment rate is also pretty low. So if the unemployment rate is low, then you're obviously the companies are not looking for new people, and so you won't have much jobs to fill up there. But I hope to see that this number, the actual real number, is higher than they expected, and hopefully the unemployment rate might ticker down. But if that's the case, then the Fed's going to be like, the economy is actually doing pretty good, so we're not going to cut interest rates. So overall, I think the goal for the Fed and for the market, for the retail investors, is for the Fed to cut the interest rate. And also, on the other hand, we got Trump wanting to he just wants interest rates to be down. So, all right, going towards our, these are my three selections that I think are very good and attractive price in April. The first one is PayPal at $65. Such a attractive price. And second is Meta, and third is Adobe. And there's so many stocks that are such well discounted, but I think these three are definitely at the top. If you guys have any other recommendations that you guys want me to do, just leave it down in the comment below, and also make sure to like the video and subscribe to the channel. So let's go with PayPal. So you guys all know PayPal. Elon Musk is one of the founders, and so obviously if you look at the past 5 years, it's been down about 30%. Past 1 year, stayed about the same. Year to date, it's down 23%. Last year, it actually went all the way down to 58, and then it went back to 90, and then down to 65. And if you look at the 5-year chart, just after the pandemic, it was at $300. So you can see that there was a lot of lockdowns around that time and a lot of online purchases. And so there's a lot of online retail, e-commerce businesses booming. So then the use of PayPal. So that's primarily the reason why. And then PayPal also owns the Venmo, which is the money transferring app. So right now it's looking at a very attractive price. And so I'm just going to quickly analyze why I think $65 per share for PayPal is cheap. What I like to do is I like to use the free cash flow model and analysis. And so this chart, I got it from a website called tickerdata.com. You do have to pay, I believe it's $12 per month. And whoever did this, I mean, they did a fantastic job. So here, I'll just go ahead with putting the ticker symbol. And you can choose whichever year that has the full fiscal year results. And so 2024 would be the year for PayPal. And I'll go ahead here and I'll put in. So the main free cash flow model here is this shows like how much cash flow that the company is generating over the past 10 years, along with what is the growth of the free cash flow over the past 10 years, over the past 5 years, over the past 3 years. And you can also choose the free cash flow per share. And if you look at the dollar per share, and it's been rising pretty drastically. So it's $2.20 per share, and that's per quarter. So, and if you look at here for the year, it starts off at $1.42 in 2014. Now it's $6.58 in 2024. And the main reason for this sheet is to really get what is their compounded annual growth rate of the free cash flow. And that's really important to know what is their actual growth in the previous 10 years. And then we can kind of use that, analyze that, and anticipate what their growth rate is and what their intrinsic value based on the free cash flow is. So if we see that for 10 years for PayPal, it's 14.63%. 5 years is about the same. So last 3 years, about 11.44%. So even if you take the average of the 10 years of 14.63 and plug it into our stock analyzer tool here, the current price is $65. And if we put in, let's just say 14.68%, this gives you a share price of $254. So if the PayPal was to grow their free cash flow at 14.68%, just like how they did it in the previous 10 years, going into the next 10 years, then this is the share price that's a fair that's a fair free cash flow price. But again, this is more to show like, hey, what is this current price? What is a market is like anticipating or seeing the growth rate of free cash flow at this price. So if you put in like 2%, it's still $103. What about 1%? It's still $96. So basically the market is saying that this company is not going to grow their free cash flows at all. And that's the reason for this price. And it's heavily sold. So I anticipate PayPal to grow at least 14% or even more modest 10%. The share price is about $183. And if you look at the historical, I also like to look at the historical PE ratio and how it's evaluated over the past 10 years. And if you look right here, it's quite low. The average PE over the last 10 years is 40.91, and right now it's trading at 15.66, and which is quite low. So I think PayPal has a very high potential and going forward in the next couple of years. So next on the list we have is Meta. So Meta has obviously, if you look at their earnings report, they're sitting on a huge pile of cash. And from 2020 to like 2025 or 2024, they doubled the amount of cash position that they have. They're sitting on almost $60 billion in cash right now. Free cash flow. So, and they did a really good job in terms of managing their company. They have WhatsApp, Instagram, Facebook, and between these three companies, they have 3.5 billion users around the world that use these services every single day. And guys, look at this. The free cash flow for 10 years is 31%. And that's CAGR, compounded annual growth rate. And if you look at it here in 2014, they had 3 billion in cash, 2024, 54 billion. So I'm not going to obviously put in this 10-year free cash flow when I'm analyzing the stock because that's too much. What is the reality that they might grow at this pace? Probably, who knows? It's Meta, it's Mark Zuckerberg. He took the company from 100 billion or 80 billion to 1.5 trillion dollars. So he could potentially do it. Great CEO, obviously. And if I just plug it in, Meta here, obviously it's not going to be 10% growth rate. If it is, I guess the market is counting 10% free cash flow growth rate, and that's kind of the price here at 576. But if you look at the CAGR of 31%, I'll go more of like, let's just say 20% going forward, or even 15%. It's still very undervalued. The current price is 576, and even if we say like 18%, it's 1,000, 20%. This is probably what I see Meta to be by end of next year. At least like 2026, mid 2026 or December 2026. I think this is 1158 around there. So, and if you look at Meta's historic PE ratio, look at that. So the average PE ratio for Meta is 30, and it's been quite stable over time. It has gone in two instances, 17 and 13, but right now it's at 23. So it's below the average PE ratio for the previous 10 years. So if you look at that, then also the discounted cash flow model price. So it's a steal deal. 576, 580, anything below 600 is it's cheap. Adobe. So Adobe obviously has been a beaten down stock for the past year or so, just due to the worries that AI is going to take over all of its services away from them, and so they're going to have a declining growth. I personally think that Adobe will have, to a certain degree, an effect, but at the end of the day, if you look at Adobe, they have so many different businesses and different portfolios that all integrate with each other, that a user I don't think a user would be willing to go beyond their means to get away from Adobe and then using other AI apps. The reason why I'm saying is that Adobe has so many different products that are integrated together. Just like you having, for example, a bank account with Chase or JP Morgan, whatever, with you have your checking account, you have your savings account, and you have a mortgage with them, you have a car loan, you have credit card, you have CDs, you have a stock market account, investments, 401k, and then now it's like another company comes in and says that, hey, we do just stock market stuff, and we offer almost the same services at $4, and right here Chase is charging me $6. Do you guys want to? Probably not. because I have everything together. I'm in an ecosystem that is it's very well built and it's very well trained, and I'm comfortable with it. So there are a lot of people that use Adobe are pretty high level people and a lot of creative works. So and it goes really well with all of their product lineup. And I don't see a big downfall. If anything, AI is going to help them a lot. And I think they're going to benefit from AI, and people are going to know and realize about it later on. So let's see how their free cash flow analysis sits at. So if you look at their growth rate, uh, they're doing a modest, like they went from 1 billion 2014 to 7 billion. So they're just doubling, tripling every 5 years, which is a good thing. And if you look at their 10-year CAGR of 22%, but the previous 5 years, so you see the free cash flow growth is slowly declining over the past 5 years, especially in the Q1 2024. That's a big drop. But overall, the entirety of 2024 and first quarter of 2025, you see that their free cash flow is growing and they are beating their previous year's growth rate. Uh, let's plug in some numbers in the stock analyzer tool here. Right now, Adobe is at $385. So I wonder at what growth rate is the market pricing in Adobe? 7%, about 7%. So the market is pricing Adobe at about 7% free cash flow growth projection, which I would say is probably right around the previous 3 years. Um, if you look at the 10-year average and plug it in, I mean, that's too high. We can plug in somewhere around, like, let's just hit 10% and see. So 484 from 385. And this is the historical PE ratio of Adobe. Going from, the average is 50, and then right now it's at 24. Honestly speaking, it is a good stock to buy just because it has always traded very rich. This is kind of the main reason that it's traded always at around 40, 50. And so trading right now at 24.91, that's pretty cheap for Adobe. But again, you got to consider all the market trends and then see how what is best. You make that decision. But I think Adobe has a very high potential going forward. It's obviously not gonna. I probably won't see a growth or a stock that's gonna be like 5xing or 10xing in the next like 3-4 years. But definitely in the next 10 years, you can see Adobe being somewhere in like $1,500 stock. So yeah, guys, those are my 3 stocks that I really wanted to talk about. Let me know if you guys have any other suggestions, if you guys want me to talk about any other stocks. This is my like watch list that I currently have. That I'm just watching them. I'm probably like most of them are priced in very well. They look very attractive, but I don't know if I'm going to make that move and put that money in there. I really look at some beaten down stocks that are trading cheap and that have good management and have great potential, and also making sure that they're can capture some market areas and really grow their revenue and earnings. So that's where I stand. I hope I hope all of you guys have a great rest of your Sunday, and hopefully it'll be a great week. Thank you.